Today we're looking at the state of the capital market. It's been a mixed bag for the Nigerian stock market this year. We've seen so many gains and so many losses. We've had earnings that have driven the market into positive territory at some point, but it seems like sentiment at the market is still pretty much mixed. So Bismark is here to give us his own perspective on the market. We'll be talking about quite a number of issues at the market, talking about all the stocks that have been in the forefront this year since the market started trading this year. And we'll also be looking at the earnings and regulatory environment. Thank you, Bismark, for being here.
Thank you. Good morning for having me. Okay.
Well, like I mentioned, it's been quite an interesting run since the beginning of the year for the stock market. It's been a mixed bag. But in your own perspective, how would you say the market has performed this year from January up until now, with just a few weeks or so to the end of the first quarter?
It's interesting in the sense that in January and February, the market's actually lost significantly. But in the months of March, we've actually gained. Year to date, the gain is about 2%. But you have to put that in perspective. The global markets have gained about 11%. That's the world markets altogether. Emerging markets have gained about 14%. The US itself has gained over 12% year to date. And therefore, we are not outperforming the big markets, but we are actually recovering from the weak performance in January and February. If all continues the way it goes, the way it's going, I think that by the end of the quarter, we could be seeing about maybe a 10% return.
Now, there was a lot of robust expectations for markets such as ours, which is described under the emerging markets. We were meant to do better, fare better than the developed market. Yeah. Now, just last week, Tuesday, the Dow hit the 13,000 point mark. Yes. Now, these are markets, this is where, or countries where that financial bubble started from. Well, it looks like they have made a better recovery than we have.
Yes, a market is only as good as its economy. So we have structural problems in our own economy, and don't forget that in January we had a strike. We haven't still resolved the question of petroleum subsidy. Part of it has been reduced, part of it is still work in progress. There are issues with the budget which has not been approved. But what I expect to happen is that in the next 2 weeks we're going to get bank earnings. The banks constitute over 40% of total market capitalization. If we see some real good results, which I'm expecting from First Bank, Zenith, and GT Bank, then we will see a massive rally in those areas. But if you look at those stocks in particular, you find that they are trading on a price-to-book basis, which is slightly expensive, but on a price-to-earnings basis, 8, 7, these are cheap stocks. And so if you look at all the analysts that have been talking about the banking stocks, you see that they are relatively cheap. Some bank stocks are trading for 1 naira 40, 1 naira 50. Those are gifts, actually. They're not prices anymore.
Now, what have been the main drivers for the market so far? I know we did have a first part of earnings, and we do have some earnings forecasts, but in your own opinion, what have been the main drivers for the market?
No, because generally the market is very cheap. Secondly, there's some liquidity coming into the market, and some of the bad news, all the bad news has been put on the table. Take, for example, UBA put out a profit warning.
And I understand we got one from Diamond Bank also.
Yes, and then UBA's profit warning, the stock went down as low as 170. Today the thing is, it's almost 3 naira. So those who bought at the dip have already made 100%. So people have seen this, and actually many of them are reacting. So profit taking notwithstanding, there's value, plenty of value in the market, and but you must know that 70% of the trade so far are by international, that is foreign investors buying in the market. Only 30% is done by Nigerian institutional investors. Now,
don't you think that's a problem if we have a market well, not so big, but of this size, and 70% of the holdings are in the hands of foreign investors? There's still this across the board apathy on the part of local investors. It's not an imbalance at the market.
No, I don't think that. In fact, that's a vote of confidence. The
to have foreigners having a bigger chunk of
investors
our local
are investors, international investors or domestic investors, they use the same parameters. But international investors don't have the hangover of the past losses in this market and are actually constantly rebalancing their portfolio. The Nigerian investors are still reeling and trying to recover from being bruised 2-3 years ago and the abuses in the market. And that brings you to the point of, look, what have the regulators done to restore and enhance the confidence in the market? So because of the intervention of the Security and Exchange Commission, because of the stance of the new management in Nigerian Stock Exchange and the culture of zero tolerance for infractions, you find that only the credible broker-dealers and those who have the capacity to trade are participating in the market. And this is good for the market. So we actually have a strong bottom, and from there we can only go upwards. And that's what you're beginning to see. The month of March is already showing that it's only 8 days so far. But even towards the end of February we've seen. But more important is the fact that the turnover has increased by over 50%. We're seeing the average turnover in March is 3.6 billion.
Yes, I was going to ask you, is there a particular reason behind that? Maybe some price-sensitive information, particularly on the stock of UBA in the last couple of weeks. It's been just massive volumes moving.
There's value. People have seen it. The earnings for the first quarter of UBA were strong. If you analyze that, it comes to almost 60 billion naira a year. A 60 billion naira profitability on a 1 naira 60 stock is, that's gravy. And basically people have seen that opportunity and have bought into it. You buy into weakness and sell into strength. So, but the turnover shows that people are now putting money back into the market.
Is it a sign of confidence?
It is a sign of confidence.
People use what confidence?
It is a sign of confidence. It's a combination of factors. The regulators doing their work, the markets being more transparent, and the results that are coming out being more genuine.
Okay.
All right.
Okay, now in the last couple of months or even years, there's been a dearth of initial public offerings, but I think last week we saw the listing of a local manufacturing company, Austin Lars, and there was a lot of buzz about it. And the company also presented its earnings as part of requirements, and it wasn't too bad. I remember the turnover and PAT was up about 50%. Should we be expecting more? And in terms of IPOs, what should the market be expecting?
I think what you're going to see this year, there'll be more listings of corporate bonds and debt instruments than equities. If you look at the return on bonds today, the yields on bonds range anything from 14 to 16%. The dividend yield you see on equities are about 2.9 to 3% maximum so far. And the money market just announced open buybacks of 13.7 and 90 days of 14.5%. So investors are going to be looking at the various returns on their investments over time. But when the dividends start coming out for the banking stocks that will come out in March, and some of the results you're going to see first quarter and in the other quarter and in June, you see that people will then realize that these stocks are very cheap. And the institutional investors, especially the international institutional investors, have seen this and are buying big time. And you're going to see turnover increase. By April, we'll be seeing turnover maybe of 4-5 billion naira a day.
So are you saying that is this a good time to come to the market to list?
Absolutely.
Whether foreign or local?
Yeah, I mean, they'll be listing, international, domestic firms will be listing, some private placements will be converted to public listings and all that. But that's not the best time, because usually you list when the market is high. So what you do at this time is to actually issue debt instruments. And you can issue convertible debt instruments, which says that this is a bond, but you can convert that bond to equity in 2-3 years' time at a favorable price. But meanwhile, the company has access to that money to expand and to grow its business and to compete.
Okay, interesting. Okay, now we know that the market is usually news-driven, but
Yes.
do you think that here in our own local markets, investors overreact to bad news when it comes into the market?
The rule of capital markets is that you buy on the rumor and you sell on the news. By the time the news comes out, it's already stale. Those who are going to take advantage of it already used it. But in this market, people are not that strategic. So they wait, and when they hear the news, they react. By the time you hear the news, everybody in town knows it. So it's of no use. You might as well just take your losses, and lick your wounds. I think that's extremely important to note. Right?
Okay.
Then we're talking about the... you had another question?
Yes, I was going to ask you about the Herodian. I heard about this Herodian behavior in some other markets. Do we have it here in the Nigerian stock market?
Yes, we do. We do, and more so here. Here we have the Herodian behavior, and we also have the last fool. That
could you just put more flesh to that Herodian?
Herodian means that you buy because every other person is buying. But those who make money in the markets usually are contrarians. Contrarians buy against the rule. Right? They are fearful when others are optimistic, and they're optimistic when others are fearful. So that's what Warren Buffett says. You can see the Forbes list came out today. Warren Buffett is now again number 3 richest man in the world. I think it is worth about $58 billion.
Wow.
Right.
Interesting. Well, I'm not surprised at that. Anyways, right now, valuations in the market are so cheap, particularly the bank stocks. I remember a time banks like UBA, even First Bank, trading as high as 36 now, 46 now, but they're now down to close to the penny stocks, category. But why are we still seeing institutional investors sitting on the fence and not taking advantage?
Basically, there's one, they do not know how reliable the numbers that are coming from these banks are. Sanusi has sanitized the market, the central bank has sanitized the market and all of that. So there's no need to be that skeptical about the results. But we've seen some surprises. We are in a market where some banks are highly profitable and some are making losses. Now that the toxic assets have all been bought up by AMCON, now that the banks have put all the bad news on the table, there'll be a few surprises. But I think the bad news is all on the table. Now is the time to start buying dramatically. I think that if you look at the RENCAP report on banking in Nigeria, Renaissance Capital, it's very clear that there's an opportunity here because risk asset growth is going to be strong. The toxic assets are virtually all wiped out. And the business model, especially because of the cashless economy and the settlement system, you're going to see tremendous opportunities for banks to reduce costs and grow their revenue lines. That is definitely a plus for the market. Okay, now
Bismark, we're almost completely out of time. Now, in your own view, what are the most attractive sectors of the market right now?
Well, the sectors that are attractive, most sectors are attractive, but I look at building materials, I look at banking, I look at fast-moving consumer goods, where there's, and again, I like to point out here that the investors are coming back into this market. The South states, like I told you earlier, the 6 states are having a summit in April, and this summit, which is going to be hosting in Asaba, the Delta State government being the host, all institutional investors are coming from all over the world to come and look at investment opportunities, not just greenfield investment opportunities, portfolio investment opportunities, and strategic investment opportunities. This is a unique opportunity for people to see where public-private partnership is at play, and the markets can derive a lot of benefit from this. I recommend it highly, and that you're going to be hearing a lot of news about it from the BRACE Commission and from the Delta State Economic Management Team.
Okay, I'm sure definitely we'll also be tracking that here on Business Morning.
But again, the sectors that I reiterate, banking is very, very
It's your
attractive.
favorite pick?
Yeah, because it's the cheapest. They got demolished by the last, now it's time to recover. But fast-moving consumer goods, building materials.
That's the Dangote Cement.
Dangote Cement, Julius Berger, and all the others. I think that will be interesting. Nestle, Nigerian Breweries, Guinness.